Hi everyone, I'm Aaron Ninnis, your loan pro from Denver, Colorado, with another installment of How Much Mortgage Can I Afford? Today we're going to be answering the question, is an appraisal always necessary? Sometimes it is, sometimes it's not, and we'll certainly give you the deep details on that. Otherwise, make sure you like, subscribe, follow, and if you know someone who would benefit from the information, share with them. This is a weekly series, and we'd love to have you back every week to keep learning about the home buying process. Other than that, thanks for joining me on this episode of How Much Mortgage Can I Afford? Howdy y'all, and thanks for joining me on another episode of How Much Mortgage Can I Afford, where we review the topics home buyers should know to have a successful home buying experience. This week I want to answer the question, is an appraisal always needed? And that's because the answer is different than what you might expect. As it seems to always be the case, we are best to divide this topic into two different categories, government loans on one side and conventional loans on the other. Starting with conventional loans, an appraisal is only necessary if required by the AUS or the automated underwriting system. The reality is that the most loans these days are initially approved by a computer and then signed off by an actual human underwriter. Going back a couple years ago, appraisals started to be converted into spreadsheets of data and saved by Fannie Mae or Freddie Mac, whoever the investor was. With that appraisal information on all these properties on file, they started to be able to establish relatively accurate values on what a property is worth. For buyers who are putting down 10% or more, there's actually a chance that no appraisal is necessary. And that chance increases as you put down larger down payments. Other factors like good credit or lower debt-to-income ratios also play a part in whether or not an appraisal is necessary. Now it begs the question, why won't it always waive the appraisal? And the answer is pretty complex because it's based on computer algorithms that are deciding if we can waive the appraisal, and it's impossible to know why it sometimes allows it to go through without one and why sometimes it requires one. But one thing I do know is that I have seen it become harder to get an appraisal waived if an offer is really going up above the market listing price on that home. The best part of this option is that we can actually run this before you would make an offer. How nice would it be to make an offer on a home in this market environment and waive the need for appraisals? Certainly, it would make an offer more competitive to a seller to choose your offer. Now, it's also worth noting that waiving an appraisal seems more likely at this point on refinances, which can save money on closing costs, so it's something else you could do there. Now, when it comes to government loans like VA or FHA, an appraisal is always going to be needed no matter what. For government loans, the appraiser is tasked with not only making sure the home is worth the contract price, but also they're looking for those health and safety issues. The condition of property is pretty important, and you can actually look at my last episode where I talk about home inspections and where I discuss health and safety items that might not be allowable by an appraiser. Okay, so the biggest difference for government loans is that if an appraisal was previously ordered, then it might appear in the back-end system that we have to use. For FHA loans, when an appraisal is actually completed, it's logged into their back-end systems called FHA Connection. Once logged, that appraisal is now stuck with the property for 6 months. So even if a buyer goes under contract on a home, the appraisal gets completed and comes in with a condition for health or safety, or maybe the value comes in low, and ultimately the buyer backs out. That same appraisal is still going to be in place on that home for 6 months on any other FHA loans. I'll give you an example. Let's say the purchase price on a transaction was $350,000 and the FHA appraisal came in at $340,000. The buyer and seller couldn't agree on terms to move forward and decide ultimately to cancel that contract. Any future FHA offer would be stuck at that same appraised value. And this rule is actually similar for VA loans, but not quite the same. Actually, one of the biggest false facts floating around is that VA appraisals are stuck to the property like an FHA appraisal, when in fact the guidelines clearly state that the appraisal is ultimately owned by the veteran or active service man or woman who paid for that appraisal. So if that borrower decides to purchase the property after the appraisal is completed and another veteran has that appraisal available, they can actually purchase the old appraisal by just paying the direct costs. Now, in either of these cases, you might not be ordering an appraisal because one is completed already on that property, but you are still going to have to pay for whatever was charged to complete that report. They're not going to release it without you reimbursing them. So, is it always needed for an appraisal on a property? The answer is no. but for most people, it will probably be necessary. So with that, thanks for watching this episode of How Much Mortgage Can I Afford? And keep an eye out for next week's episode where I'm going to explore costs that are associated with buying a home that has an HOA, some of the transfer fees and things you can expect at closing. Thanks for watching this episode of How Much Mortgage Can I Afford? We'll see you next time.